Hey, I was gonna say I am the Flash, but you know that I'm Alan So Blank. Okay, now that the lame intro's out of the way, well, one time it was kinda messed up. I was wearing the Flash shirt, and somebody told me that I can't wear the Flash shirt or I shouldn't wear the Flash shirt because I'm slow, I'm not fast. Okay, but in this video now I'm going to talk about some share statistics about a stock that you should know about if you want to be a day trader. So those three things, those statistics you should know about are the float, shares outstanding, and market cap. Okay, so now let's get into it. I'll use the whiteboard again. So float, this represents the number of shares that retail traders can trade or buy or sell. And retail traders are people like you and me. Okay? So I'll just put number shares retail traders. Okay? And then the shares outstanding represent the float plus insider shares. So insiders can be people like the CEO, and then maybe people on the board of directors like a chairman or chairperson, or a COO, chief operating officer, or a CFO. They might have shares in the company that people like you and me outside of the company don't have access to. So shares outstanding equals the float plus insider shares. Okay, so day traders obviously care more about the float because the float represents the supply available for retail traders. Okay, while the shares outstanding, the retail, the day traders, they can't trade these shares outstanding, so they're more concerned with the float. Okay, so that's shares outstanding, and now I'll talk about market cap, and then that is short for market capitalization. Okay, I'm not going to write out capitalization, but market cap is the value of a stock based on the current price times the shares outstanding. So value, and this is a dollar amount, so dollar value based on, I'll just abbreviate it, shares outstanding times current price. Okay? So if a stock is $10 and then the shares outstanding is 5 million shares outstanding, so you take 5, the total number of shares outstanding, times the current price, which would be $10, equals 50 million. So the market cap of a stock that's $10 with the total shares outstanding of 5 million, the market cap is 50 million. So for market cap in the stock market, a 50 million market cap is considered a small cap stock, or a stock with a small market capitalization. Okay, so I can write now small cap. I'll just say some people have different definitions, but for me, I'll call a small cap stock a small cap has a market cap under 250 million. Okay, so the M stands for million. Okay, so then we'll say a mid cap. I'll just, again, some people might say, give you different values, but for me, I'll say between 250 million to 10 B or 10 billion is considered a mid cap, or a stock with a medium size market capitalization. Okay, and then a large cap is anything above 10 million, I'll say, or 10 billion. 10 billion plus equals large cap. And then blue chips are stocks like, well, famous stocks like Apple or Disney or Facebook. And I think Apple, the last time I checked, had a market, the shares outstanding were, I forgot exactly what the shares outstanding were, but the market cap was over $2 trillion. So that one is well over 10 billion, but those are considered blue chips. So I can just write blue chips equal stocks like Apple, Facebook, okay, etc. Okay, so those are some things you should know. And now regarding the float, what's considered a small float, or a stock with a low float, so I'll just write here low float. The low float equals float under 10 million. So sometimes you'll hear traders say, oh, this is a low float runner. So that'll mean that it's a stock that's going up in value a lot, and the float is under 10 million. Okay, so normally low float stocks or small cap stocks are more volatile than mid cap or large cap stocks. And in a previous video, I talked about volatility. And so the reason for that is because normally, let's say in that example where I said there's a $10 stock that has 5 million shares outstanding, and then so the market cap would be 50 million. So normally for that $10 stock to go up to $20 in one day, or to go up 100%, theoretically about 50 million or more dollars needs to go into that stock in one day. And so that's a lot easier to accomplish, because if the stock on the day ends up with more volume than 5 million, then $50 million worth of shares, or that amount of money went into the stock. So it very well may go up to 20. That doesn't always mean it'll go up to 20. Sometimes it might trade 50 million shares and it barely spikes, or it might even go down a little bit. But normally that's the reason why low float stocks are more volatile, because their market cap, will say, the market cap can be rotated. So let's say if there is that $10 stock with 50 million market cap, and then the volume was 50 million, we can say that the market cap rotated, or the stock rotated through its market cap about 5 or 10 times, because all it needs is 5 million volume at $10. That will equal 50 million. Okay, so are you following along? So when the stock starts to rotate through its market cap, that represents that the supply is limited and the stock is in high demand. Okay, so the market cap and the flow, along with the volume, can tell you if the stock has limited supply plus the demand is high. So if a stock gaps up and there's news, and it looks like, oh, the volume the stock might trade with 50 million volume, and if the float is only 5 million shares, and if it trades 50 million volume, then we can also say, instead of market cap rotation, float rotation. So if the float is 5 million and the volume on the day, and at the end of the day, is 50 million, you take that volume, divide it by the float, and we'll say the stock rotated through its float 10 times. So if a stock rotates through its float a lot of times, it won't be so surprising for it to maybe spike 50 to 100% or more. But again, it doesn't mean it always happens, but it'll be more likely to happen with a low float stock or a small cap stock, instead of a stock like Apple with a $2 trillion market cap. Like, there's no way that's going to ever really go up 100% in one day, unless something crazy happens, or It just trades an insane amount of volume, and about $2 trillion goes into that stock in one day. Okay, but sometimes a stock, like last year with GameStop, I think that stock started when it was around $100, when it was starting to spike and keep going up every day. When it was around $100, I believe the market cap was somewhere around $10 billion, and then in one day it did go from like 100 to almost 200. And then if you take the average of that volume, so I'll just do a very rough estimate, but one day GameStop last year, I think around the beginning of 2021, the ticker's GME, it traded 100 million volume, and then the let's just say the average price was about 100. So if you take 100 million times 100, you add two zeros, that will equal 10 billion. And so in that day, we can say about 10 billion went into GameStop. And because it, we can say like it rotated through its market cap, because 10 billion went into that stock in one day, it pretty much went up 100% during that day. And then if you were following along with it last year, it did an insane short squeeze, and a couple days later, I think it went up to 500. Okay, so sometimes, like if we have something crazy like the COVID era, where people are staying home during lockdown, and then the government is giving them stimulus checks that pumps a lot of extra volume into the market, so we started trading an insane amount of volume, because usually mid-cap stocks, or stocks like with a market cap of 10 billion, they normally don't go up that much. But if the volume is there and it rotates through its market cap or float a lot of the time, a lot of times it can do a big short squeeze like that, or go up 50 to 100% or more. Okay, so now you should have an understanding of float, shares outstanding, and market cap, and you should understand why small cap stocks are more volatile than mid cap or large cap stocks. And then I explained market cap rotation or float rotation. And if those things are occurring a lot, it'll be likely that the stock, but not always, because in trading nothing is an exact science, but it'll be more likely that that stock might spike 50 to 100% or more in a day.